General Motors reported fiscal 2023 first quarter earnings results that were pretty exciting. And if you're a dividend stock investor, GM is one I think you might want to consider. And if you're an investor looking at good EV stocks, GM again might be one that you would like to consider. So this video will go through GM's latest earnings and answer a lot of questions you might have as to if GM is a good dividend stock to buy or if GM is a good EV stock to buy. So let's begin. Revenue increased by 11.1% to $40 billion. Earnings per share increased by 25.2% to $1.69. GM is benefiting from the pent-up demand from consumers to buy cars. There were significant shortages in the market for the last year and a half, 2 years, and you saw used car prices soaring and brand new car prices soaring as well. Dealerships are selling cars at above MSRP, manufacturer suggested retail price. This is not likely to last long term, but while these shortages persist, GM is benefiting from that tailwind, producing only the higher end models that have higher profit margins. Well, I shouldn't say only the higher end models, but mostly the higher end models that have higher profit margins, and is benefiting from that tailwind, capitalizing on it. Additionally, GM is investing in its transition to producing more EV cars. In the quarter, GM sold more than 20,000 EVs in the US to take the number two market share behind Tesla. Um, GM will have capacity to produce 1 million EVs by 2025 and even more after that. To put that figure into perspective, Tesla is aiming to produce 1.8 million EVs here in 2023. So even by 2025, GM will be behind Tesla in terms of the total number of EVs, but that doesn't mean it will be behind Tesla in terms of revenue and profits because Tesla is skewing more towards its lower cost Model 3, and GM may sell more of its higher priced EVs. It's going to have a range of models available for every price point, and it may end up selling more of the higher price points. That remains to be seen. But the fact that it's investing in the capacity to produce 1 million EVs is definitely bad news for Tesla, Rivian, and others that are also trying to gain market share in electric vehicles. GM is expanding US battery cell production. Its second and third cell plants are under construction. The Tennessee plant is near completion. So that second cell plant is near completion, and the Michigan plant is scheduled to start production in 2024. So in order to ramp up producing electric vehicles, it's ramping up its battery cell production. Of course, battery cells are the primary component in electric vehicles, the costly component, the one that's difficult to source, and uh, choosing to have its own battery cells production instead of buying it from suppliers gives GM a bit of diversification and exposes, well, I should say, reduces the risk from needing to go out into the market and buy these battery cells when competition for these is soaring. It's through the charts. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. GM is also pioneering self-driving technology with Cruise. Its driverless cars are completing over 1,000 trips per day in the around the mostly around the San Francisco area. So, Tesla's been talking about self-driving for a long time. They've been promising self-driving for a long time. GM's already got that with its Cruise segment. So it's completing a lot of miles, collecting the data. The more data it collects, the more effective it becomes, learning from its mistakes. And it wouldn't be surprising if by 2024, 2025, it expands this driverless um, fleet throughout more cities, especially in California where it already has the permit to operate. So that's something exciting to keep an eye out for. That could be truly innovative for GM. The company, you might have heard in the news, offering buyouts to its employees and other cost cutting measures. This was its plan to reduce fixed expenses by at least $2 billion annually, and it's on track to hit that target. Overall, it had an excellent quarter that caused it to raise its earnings per share target for 2023 to a range of $6.35 to $7.35. That was up from the previous target of $6.50 at the midpoint. So, overall, an excellent quarter for GM, generating significant profits in the right now while investing for the future with its electric vehicles. So GM is a company to look out for. Certainly, some of the newer EV companies will need to pay attention to GM. It's making innovative steps forward, and the stock is not prohibitively expensive. When you compare GM's valuation to Tesla or Rivian or Lucid, you've got a um, less expensive way to play the electric vehicle trend, right? If you're bullish on the growth of electric vehicles and you think they're going to rise to become a dominant share of global EV sales, GM is a lesser expensive way to play that compared to playing that trend through Tesla or Rivian or Lucid or Polestar, because those stocks are trading more expensively than GM is. So I think it's an excellent dividend stock to consider. It's an excellent EV stock to consider because of its relatively inexpensive valuation compared to the other EV stocks. All right, that's all I've got for this video. Thank you so much for watching. I hope you'll tune in again next time for another video.